gives me great pleasure now to bring on board Milind Karmarkar of Dalal Broacha to talk about market trends, Outlook 2023. We've had numerous chats on this forum where every time we've spoken about it, he's always highlighted the importance of thinking long term, looking at the future growth. Don't get carried away by elevated P multiples, because if business is growing, markets will continue to reward those businesses. So nice to have you back. 2022, what a year it's been. I mean, whatever could go wrong has gone wrong. High inflation, extreme tightening by central bankers, a war
Yeah,
in middle. It's just been
correct.
such a topsy-turvy year.
I know. I know.
Are the decks now getting clear for a solid 2023? Because while India may have done very well in relative terms, but for equity investors, 2022 has not been a year of great remembrance. I mean, returns have been in single digit.
Uh, well, yes, I agree with you. Returns have been in single digits, in many cases negative as well, because the small cap index is still significantly low, and most of the smaller investors always invest in small cap. So that is the worry. But at the same time, 23 the outlook looks good, though there was a bit of a scare for last 2 days with news about significant infection in China because of the new variant of corona. But as things go by, I think it looks like that China is also getting back slowly to normal, because the whatever photographs and other things are coming from friends in China, at least they indicate that the lockouts have been removed, and because of that, slowly the overall life is getting to normal. So I hope that this variant remains mild and it doesn't impact the global economy that much. So yes, I'm looking at a good 23 going forward.
One of the most important moving part for 2022 was interest rates. Interest rates, like Buffett has always said, they act like gravity. Interest rates, they go higher, markets, they come down. Interest rates have been, it is not that interest rates have reached alarming levels, but the pace of interest rate hike is something which has bothered markets, consumers, home loan buyers like me. If interest rates they continue to stay where they are for 2023, don't you think it will have impact on consumption, market valuations, the way equity as an asset class in a sense is going to move?
So I think this December's rate increases both by the Reserve Bank of India and Federal Bank indicate that they're slowing down the pace. They have not said that they will stop the rate hikes. And I think that will continue for some time, but towards the second half of calendar 23, I'm sure that the rate hike will be paused. And as that happens, I think we will see, demand coming back. In fact, demand is already back, but interest rate hikes could impact it. So the demand growth will be a bit slower. But second half onwards, I think things will return back to normal. And as we go ahead, and because for every rise, there will be a cut going forward, may not be immediately, maybe in 24. And that hope will drive the markets. And I think we will have a good 23 going forward, both in terms of economy and in terms of the markets as well.
There's a very thin line on what is value and what is growth. But in 2022, the whole approach towards value made a comeback. The term which I use is Sasta Sundar Tikau. Those businesses have made a comeback. Do you think in
So,
2023 this
uh,
entire re-rating of value, whether it is in a yes, please.
yeah. So what happens typically is that most of the value stocks typically are in commodity or commodified products. And yes, as they get cheap, they will be buying in that. They will show some kind of a uptake. In fact, they can deliver good returns in the shorter term, But longer term, I continue to believe that those businesses which have a very long growth path, they are likely to do pretty well. So it's let me put it this way, that it's growth after considering, PE after considering growth over a longer period of time. And as long as the businesses generate cash flow, I think those will be the businesses which will deliver over a longer period of time.
You have bought into PSU banks, is what I understand. Was that a trade, or you think that the trend in PSU banks is a multi-year trend?
PSU banks will always remain a trade. And over a longer period of time, it will be private sector banks which will do very well. For simple reason that they are more retail centric. And I think though the capex cycle has started and corporate loan growth has also started, over a longer period of time, uh, the corporates will probably borrow from the stock markets, in the sense that to debentures and bonds rather than going to the banks. And the real growth in banking will come from retail, where private sector banks are very well established, and that is the reason why I'm saying that they will do probably better than the PSU banks over a longer term.
Okay. How do you see the entire consumer staple space moving? And I'm asking you this question perhaps based on two facts here. Time-wise correction in some of the consumer staple stocks and some of the famous brand companies has already started, whether it is Asian Paints or a Nestle. With the exception of IT, all these stocks are now not going through price-wise correction, but also time-wise correction. Second, the argument which is now coming to fore is that the revenge shopping and the binge shopping and that one-time demand re-rating which happened post-COVID, that is unlikely to sustain, which means the base effect and the slowdown will start in some of these categories.
So let me take you to my favorite theme, which is rising per capita income. And just as between 2003 to 2008, our per capita income went up by close to more than two times. I wouldn't be surprised if this time also a similar thing happens. So besides, binge shopping, as you say, there will be additional money coming into consumption, mainly because of the rising per capita. So that is because as your basic demands are settled, the money will go into consumption, and that will drive growth in these stocks. There will of course be bifurcation, in the sense that some stocks will, some sectors within consumption will grow less, and some segments will grow more. So that is where one will have to take bets. So I think I continue to believe that retailing will do very well, whether it's in the form of grocery or otherwise. While as fast-moving consumer goods, the growth will definitely be there, but not as much as retail. That's what I believe.
Have your top three holdings from the beginning of the year changed, and are you repositioning your top three or top five holdings for 2023?
No, they have not changed. They remain the same, because I have always been focusing on consumption. So consumption remains the main theme of our portfolio. Though we have added some industrials on the way, and we will continue to hold them, because I do believe that the new capex cycle has started, and going ahead we will be benefited because of the new capex cycle, and that is why we have some industrials in our portfolio. And of course, as you said, that we do also have travel and tourism related stocks in the portfolio.
Just for the reminder of our viewers, what are your top three holdings? Since they don't change, I'm sure there is no harm in talking about them.
Yeah, it's okay, because I have been talking about Titan and Trend for a very long period of time, and I continue to be bullish on that. I sort of revisit these themes, and I try and visit these stores once every 2-3 months, and I always find the kind of crowds which are there in these stores continue to uh, sort of reconfirm my thought process that these stocks will continue to do well. So yes, I continue to believe that uh, stocks in retail are likely to do pretty well.
You track the Tata Group very closely. That group has seen massive re-rating, whether it's a Tata technology company or a Tata retail company or a Tata IT company. They are now commanding best P multiples, at least in the sector. Is that one-time re-rating which everybody thought would happen under Chandra's leadership from a market standpoint? Is that over now?
I don't know, Nikuj, because if you look at the US, which according to me is a benchmark for any democracy which is getting into a large growth path, you will see that most of the large corporates in the United States are those where there is a clear distinction between ownership uh, and business. So that is what Tatas have done. They have always had professional business leaders, and the ownership has remained separate. So I think that is one of the reasons why I believe that Tata Group will continue to grow the way it has. So I don't see any re-rating adjustment in the Tata Group shares, and I think it will be the re-rating will be justified by the growth which they show.
Is the entire fintech space now looking attractive? Because those are businesses which are high growth businesses, rare to find large businesses which can grow at 40-50%. And now there seems to be a cognizance by promoters where they're using the language of path to profitability, EBITDA, the importance of EBITDA, the importance of cash flow. There is a change of heart there. Have you also changed your heart as an equity investor? And are you looking at these stocks?
Frankly, I am looking at these stocks, but as of now, we are not invested in these. The main reason is I would like to see the money first, and maybe I'll buy it at the higher price. But once I'm convinced that these businesses will start generating cash flows, may not be immediately because that's what I always believe, but over a longer period of time, I wouldn't mind investing in these because some of the businesses are indeed interesting. So yes, I will. I am looking at them. I'll continue to look at them, but probably invest once they show some kind of a traction when it comes to cash flows.
What, to your mind, could be the differentiating factor for 2023 versus 2022 from a market standpoint?
Over next 2-3 months, we will. I wouldn't say celebrate, but we will see an end of the pandemic as we have seen it over past 2 years. We will also see economies slowly getting back to their normal, uh, its normal ways, and that would be so. If I look back at 22, there were major uncertainties around 22. Whether it was war, whether it was COVID, or whether it was, as you rightly said, the rising interest rates, all at least two of them is all probability will likely come to an end. The third one, which is the war between Ukraine and Russia, though I wish that it ends soon, and there are certain news reports which are moving around saying that uh, Russia also is looking at some kind of a discussion between Ukraine and Russia. If that happens, then I think we will have a very good 2023.
Okay. You have a very large exposure to pharma as per your declared portfolio, 14% directly or indirectly. Now, these are companies which are losing pricing power, they are losing their whole niche positioning when it comes to US generic market as well. What gives you this confidence of having 14% exposure to pharma?
So let me tell you the way we are exposed to pharma is actually healthcare. So we are invested in a couple of pharma companies. We are also invested in hospital, and we are invested in a contract research manufacturing company. So this forms our pharma portfolio, which I think is well balanced, and it's not pure pharma, as you say. So going forward, we are not much worried about the kind of delivery which these stocks will give us over a longer period of time.
You have bought into hospital stocks, something which you've discussed, I think, 3-4 years ago.
Yes.
But isn't the hospital business getting highly competitive? It's a tough business, requires capex continuously. It's a business where doctors, they get fat amount of the commission. It's a business where you have to upgrade the machinery, upgrade the skill. There is a lot of brownfield, there is a lot of greenfield. So typically this is not the business which is a free cash generating business. Yet you like them. Why is that?
So many hospitals are also moving to asset-light models. And I think that will drive future growth. Second is, I always believe that rising per capita income is the key and insurance penetration is the key for growth in hospital business. So going forward, I do see these hospitals generating free cash flows. Some of them have already started generating. And over a longer period of time, the demand itself will go up. And because of the penetration of insurance, we will also see more and more people willing to take hospitals and healthcare serious. So that is the reason why I think that these businesses will do well, because again, if I see globally compared to that, Indian hospitals are extremely small. So there is a lot, lot for them to yet to come. So that is the reason why I think that good and well-managed hospitals are likely to do well over another
At what point in time IT becomes a buy? I'm talking about large IT services.
Yeah. So as of now, the issue is that IT services. So there are two aspects to investing in India. One is, of course, uh, the growth itself in India, which is doing very well. So any company which benefits out of the GDP growth in India is likely to do well, because if you have a 6-7% GDP growth and 4-5% inflation, you have a 12% growth inherent in the economy. So any good company working in this environment ought to grow at about 15 to 18%. And that is what good companies will do. Coming to software companies or technology companies, a lot depends on the global economy, because if the global economy slows down, automatically their discretionary demand goes down. And because of that, there is a slowdown in software services or outsourcing it. So this will continue for some more time. But then again, one cannot be away from technology for a long period of time. So as the growth in the West or the developed markets, especially in the United States, starts picking up, I think these companies will also do well. For the time being, I think they will probably grow at a rate which is lower than the nominal GDP growth of India. So I'll keep looking at things, and if I see a clear indication that US is going to start coming back on the growth path, I would go ahead and start looking at these technology companies.
Put up with one final question. If I look at your top ideas, consumption names, like if I look at the top themes,
yes,
whether it is a consumption, top names like Titan, Trent, these businesses are in a solid uptrend.
correct.
But as a long-term investor, you always have to buy where there is fear and where there is uncertainty, which is that businesses are going through a short-term slowdown, but the medium to long-term picture looks strong, and that's where long-term investors, they buy them. So where are you buying stress in the market? Where are you buying the bad news? Where are you buying the combination of bad news but a bright future outlook?
So I keep looking at the markets, and wherever. So we are basically a idea based. We keep looking at stocks where there is the market feels that there is no growth left in the stock. And if we see the kind of growth, we will go ahead and buy. Like we bought Thomas Cook, we bought a hotel stock that's about a couple of years back. So we will keep looking at these things and buy and then hold on. But as of now, I continue to keep my eyes and ears open and look at companies where I can see this undervaluation. Because most of the companies where people are looking at as of now about as you said the value stocks, they have growth path, but they have a growth path for a limited period of time. I would like to invest. So those would be trades. I would like to invest in stocks where we have a long-term growth path set in, and I keep looking for these companies. So at least 40 to 50% of my portfolio will be built out of these companies where we will hold it in the portfolio for anywhere between 5 to 15 years.
And as of now, you see the conviction to own and stick to your top holdings, Titan, Trent, maybe Narayana Hyderabad, HDFC Life for another 5 years. Do you see that kind of a conviction as of today?
Yes, I definitely see that kind of a correction. Because what has happened is that, especially in insurance, last 2 years have been very bad and there have been significant underperformers, frankly. But going forward, when we talk to these companies, the opportunity looks massive. The underpenetration continues to be there, and as COVID recedes, the impact on these insurance companies will also go away, and they will start delivering great numbers. That's what I believe.
Well, Mr. Karmarkar, it's so nice to have you back. 2022, personally, I know it's been a challenging year for you as well. So take care of your health. Wish you a wonderful 2023 ahead, and certainly see much more of you going forward.
Yeah, good luck and good 2023 to you as well.